Happy Friday, traders. It is the 5th of June, 2015, 8:02 a.m. Chicago time, coming at you from the Chicago Loop Financial District. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight session gives us pretty muted activity. The Shanghai Composite is up 1.5%, finishes up 1.5%. It's at its highest level since January of 2008 in a fairly volatile session. Greek assets sell off amid IMF repayment delay. Greece is not going to make, surprise, surprise, they're not going to make the payment deadline today, and they're talking about bundling this repayment that's due today. I think it's 330 million euros with some other payments that are due shortly. Pay later. Bunds initially continued their recent decline with the 10-year yield failing to consolidate above 0.9%. The Bund is battling with a 1% yield line. The Bund is the 10-year German Treasury. It keeps bouncing off of the price of 150 even. I'm expecting the yield to increase slightly with the Bund falling further and taking out Wednesday's low. WTI and Brent crude oil futures are mildly lower ahead of the OPEC meeting. Several ministers have indicated, from the cartel, have indicated that oil production will be kept the same. Expecting some volatility in crude today due to that. May change in non-farm payrolls in the U.S. came in at 280,000 versus 226,000. This is the highest since December. The change in private payrolls, 262 versus 220,000. May unemployment rate, 5.5% versus 5.4% expected. May average hourly earnings at 0.3 versus 0.2%. So we're seeing decent push in wages. Unemployment rate slightly higher, but non-farm payrolls much better than expected, and the market sells off. And it all has to do with interest rates and the anticipation of an interest rate increase, which to me is quite baffling, since it's really clear what the Fed is looking for. Fed fund rate, 30-day federal funds futures. I don't know if you're aware that they even exist. The symbol for those is ZQ on the CME. That's the contract the price is in anticipation of what the Fed funds rate is going to do, and it's looking like it's pricing in a September increase still. Looking ahead for today, we don't have anything of any significance really as far as economic releases. ICRI weekly numbers at 9:30, Baker Hughes at 12, both affecting energy. But other than that, we have a 9 o'clock press conference with OPEC, 9 o'clock Central. So if you're in crude oil, you want to keep an ear out for that. At 10 o'clock Central, we have Greek PM Siparis briefing Greek Parliament. Again, you want to pay attention to that if you're in the European products or Euro pairs. And then at 11:30 Central, we have Fed's Dudley, who's a dove, is speaking on the economy and economic policy in Minneapolis. Let's switch gears and look at our technical side here. Yesterday's Trader Bite outlined Hypo 1 as opening out of range with the expectation that we would push through to 2110 and 2112. And I spoke about the idea that I'm expecting a pretty decent amount of resistance in that zone, 2110, 2111, 2112 being the key. 2112 is a very prominent and clear point of control here. with a consensus on price. And what the market did is it opened, it's an open auction out of range, 2106. I started from home, so these lines are not where they're supposed to be. With the OS at 2106 quarter, down to 2099.75, and then a rotation up to 2111.75. It's just a couple ticks short of our key resistance area, and then it was just a beautiful drop and continuation down to the key target for the week, basically at 2094.50. 2094.50 has been mentioned several times. I'll show you where that comes from. 2094.50 is carried over from the profile midway consolidation and as a CHVN or a high volume node on the composite. There it is, this black line being carried forward. We've come close to it in the past. It was 95.50 on the CHVN, and it shifted down to 94.50. We stopped at 96 quarter last time, and we got that target pretty handily there. And then the expectation, because the 94.50 is a high volume node or an accepted price, the expectation is that the market is likely to chop around it, and that's exactly what happened here. You could see that it's pushed through by 3 points lower, 3 points higher, built a new high volume node. But if we look more closely on this high volume node right here, just look at this consolidation at a previously accepted price. It's just beautiful how the auction is working here. There's just no interest in either direction. Price is being accepted down here. A couple of attempts higher. A small local double top expected to break at some point, and it did on the close. But overall, we shifted the point of control down from 2100 down to 2093 with a pretty loaded low. I mean, this low here looked like it was just a powder keg ready to explode on the downside. So the way I left it at the end of the day, I'm not sure if I put it on Twitter or in the S5 chat room, the expectation is for a lower low in the overnight session. So let's look at the overnight session. Overall, we had a strong bounce on the close. This looked to me like a margin covering. If you look at the amount of volume that goes through the ES every day versus the open interest, the overall open interest and the shift in open interest, a good amount, a substantial amount of the volume that's going through here is day time frame volume. Day time frame volume tends to trade with leverage, and if it's trading with leverage, then the expectation is that those folks have to square up, and you can hear that if you have a pit squawk service. You'll hear that locals are stuck long or locals are stuck short on trend days, and then you have this rebalancing at the end of the day. I use the delta to determine what is the likelihood of a bounce up versus continuation. Combine the delta with the who is in control with an assessment of who is in control, gives me an idea of what will likely happen on the close. And what we did is we had a strong covering rally here. We went sideways overnight, and then we ended up retesting the low but not taking it out. This makes the low even weaker with an expectation of a strong break lower. We waited till the non-farm payrolls to actually get it done. If looking at non-farm payrolls, if we look at May's release, May 1st, the high is 2106.75, the low is 2087.75, with the scene of the crime at 88.50. That was May, the May 1st non-farm payrolls covering April's numbers. Today, the high is 96.75 on non-farm payrolls. So 96.75 right here somewhere, right in this area, with the low at 86.25, right down here, 86.25. So just slightly below where it was last time, well within the high, well below where it was last time. And the SOC, or the scene of the crime, or the spot from which the move occurred, is 94.50. 94.50 again, the HVN. And so it's just not going anywhere. This is further evidence that there's nothing to do here. The market is not able to find anything to do with these prices. We're just going completely sideways. Here we are. For the last almost 2 weeks, we've been sideways. Before that, for the whole week, we've been sideways up here. And then before that, we managed to run up. But overall, just complete balance. The market does not have anything to price in. It's waiting for information. It continues to wait for information. And so that's where we are. We're in a balanced trade. This is the kind of market where you'll see your trades get stopped, and then you'll see the market turn around and go back to your scratch area again and again and again. And you just need to recognize who's in control and what the market condition is. So what we've been getting is intermediate term players coming in at some point in the day. So we generally early we get the buy side. We've been getting the buy side. So if you look at what's been happening is we sell off and we get the strong buy side, sell off, strong buy side, sell off, strong buy side. But it's intermediate term players trading in a balanced mean reversion type configuration. So that's where the program focus is, I think, and where the larger participants are. And the high time frame, meaning the big long-term traders, are not participating in here. Volumes are quite normal, and we're not seeing any directional moves. So in general, this is the ES is generally so far being used, in my opinion, as what it was intended to be originally, as more of a hedge product. And so it just seems to, as it trends up, you'll see an impulsive move, and then there's just a return the other way, and that's the condition that we're in. It is June, sell in May, go away. Let's see. We have not dropped much at all. We still have a shot at the high, but overall, your job as a trader, in my opinion, and again, with my background as a prop guy, your job is to just recognize, is to stay vigilant about recognizing who is in control, what areas is it testing. If it fails in an area, what is the next area it's likely to test, and then combine that with order flow or whatever you use to determine the locations of your trades, and sticking to your risk limits. In my opinion, that should put you in a pretty decent position to take advantage of the movement. It is not an easy market to trade. I find myself looking at thinner products more, NQ, crude oil, and things like that more than the ES. But there are opportunities here. The range is pretty decent. Yesterday, the range was 20.50, 20 and a half points, with the norm, the higher end of one standard deviation at 20 and a quarter right here, since October 9th of 2013. Volume was also on the higher end of one standard deviation. So you're getting the range, you're getting the volume. It's just not going anywhere. And here we are. We've pulled back to the next balance zone. So the question is, do we get a bounce from here to retest the balance that's been formed above us at 2101.50? Or do we linger here today, since it's non-farm payroll, and then continue lower down into 2083? Quick thing. So my hypothesis for today, I'm looking for it to be very noisy on the open. I'm expecting it to be stuck here, to be honest. Overall, it's trading right in the middle of the overnight session, and we're up against the point of control from yesterday. Notice the overnight session's point of control is almost completely in line with yesterday's point of control. It's accepting these prices, and the non-farm payrolls number has not changed that perception. So to me, it's chop to potentially higher towards yesterday's close at 2099. I expect to test the 2101.50 as the primary hypo today. However, it's NFP. Anything can happen with OPEC and this IMF stuff going on. Who knows? A couple things I wanted to show you while I have you. Here are the 10s again. The 10s have dropped pretty good this morning, expecting another leg down. The next target for the 10s, a key target right here I talked about yesterday, 124.17 is the HVN. I'm looking for the 10s to push down into that area. Keep an eye on the Bund if you've never looked at it. It's a very interesting product. It's definitely a mover. It's got the volatility. So over the last few days, we've had this beautiful impulsive move down, expecting the Bund to breach and take out the low of 149.60. The next Bund target, the key Bund target, is right here at 148.85. Looking for a test of that. I believe the Bund is likely to continue lower, therefore 10-year yields on the German note to increase above 1%, as there is additional risk to what's going on in Europe. I'll leave you with that. It is Friday. I want to remind you before you leave that this is not a good day to take additional risk. This is not a good day to walk away with very, very poor results into the weekend. It could ruin your weekend to do this. I've done this many, many times where I just get frustrated with the lack of movement and then end up flipping positions and taking on too much risk, which is unrecoverable as the session just dies out early. We are in the summer, and bigger traders want to get out of there as quickly as possible. With NFP, generally business is done early, and folks just leave. The key players just leave early. So this is a good day to be patient. If you don't find your spot, remember, you're not trading on feelings. Feelings and emotions are not a good indicator of what you should do as a trader. So if you're trading on feel, then you're setting yourself up for failure, in my opinion. So it's best to just wait for a higher probability of something happening, a recognizable pattern or whatever, and trade your plan. And if you don't see it, so be it. I'd rather walk away not having executed a trade today, which for many people doesn't happen. I'd rather do that than walk away with a loss that's unrecoverable. Anyway, I'll leave you with that. Good luck, and I'll catch you on Monday. Take care.